Hello, I'm Anthony, and welcome to KPRE Capital Group's channel. Today I'm going to give a brief overview of private lending and the three main types of loans in the space. Private real estate lending refers to the practice of providing financing for real estate projects from private individuals or organizations, rather than traditional banks or financial institutions. This type of lending has become increasingly popular in recent years, as it offers alternative financing options for borrowers who may not qualify for traditional loans, or who require a faster and more flexible lending process. One of the most common types of private real estate lending is fix and flip loans. These loans are specifically designed for investors who purchase distressed or undervalued properties with the intention of renovating them and quickly reselling them for a profit. These loans are typically short-term, with a term of 6 to 12 months, and are secured by the property being purchased. To obtain a fix and flip loan, a borrower will typically need to provide a detailed renovation plan and a budget for the project. The lender will then assess the property and the borrower's financial situation to determine the loan amount and interest rate. These loans often have higher interest rates and fees than traditional loans, as they are considered riskier due to the short-term nature of the investment and the potential for unexpected costs during the renovation process. Another type of private real estate lending is bridge loans. These loans are used to bridge the gap between the purchase of a new property and the sale of an existing one. They are commonly used by homeowners who are looking to upgrade to a new home before selling their current one, or by investors who need quick financing to acquire a new property. Bridge loans are typically short-term, with a term of 6, 12 months, and are secured by the property being purchased. To obtain a bridge loan, a borrower will need to provide proof of the current property's value and the expected sale price, as well as a plan for the new property. The lender will also assess the borrower's financial situation and may require collateral in addition to the property being purchased. Bridge loans often have higher interest rates and fees than traditional loans, as they are considered riskier due to the short-term nature of the loan and the potential for delays in the sale of the current property. Lastly, private real estate lending also includes debt service coverage ratio, DSCR loans. These loans are used for income-producing properties such as rental properties or commercial buildings. The DSCR is a measure of a property's ability to generate enough income to cover its debt obligations, and lenders use this ratio to determine the loan amount and interest rate. To obtain a DSCR loan, a borrower will need to provide detailed financial information about the property, including its income and expenses. The lender will also assess the borrower's creditworthiness and may require collateral in addition to the property being purchased. DSCR loans typically have longer terms, ranging from 1-5 years, and may have adjustable interest rates. These loans are considered less risky than fix and flip or bridge loans, as the property is generating income and can cover the loan payments. In order to obtain any of these types of private real estate loans, borrowers can approach individual private lenders or work with a private lending company. These lenders often have less stringent qualification requirements than traditional banks and can provide faster funding, making them a popular choice for borrowers in need of quick financing. In conclusion, the private real estate lending arena offers a range of options for borrowers looking to finance their real estate projects. Whether it's a fix and flip, bridge, or DSCR loan, these private lenders provide alternative financing options for borrowers who may not qualify for traditional loans or who need a faster and more flexible lending process. However, it's important for borrowers to carefully consider the terms and conditions of these loans, as they often come with higher interest rates and fees. Well, that's all for today. Thanks for watching. We'll see you next time with more information on private lending. And please remember to subscribe to our channel.